Okay, hi traders. My weekend video. We had three main data points hitting the tape there Friday, and I want to talk about them. I think the first one is called a CPE or PCE data for inflation data. It's the core data the Fed uses to judge their inflation expectations going forward, and it came in slightly less than what they had expected, suggesting a transitory. This inflation is transitory, just like Yellen has been saying here lately. And if that being the case, a lot of this inflation theme seems to be coming down a little bit. We saw that in a lot of the price action there Friday. So keep that in mind going forward here. That data does seem to be coming in a little bit here going forward. Then we also had personal income, and it missed a little less than what expected. They were expecting a negative 2.5% for the month, and we were only negative 2%. And basically, we have government spending coming off because of all the cuts and the unemployment benefits, and that has a lot to do with it. But see, we have an expanding job market. People are going back to work all of a sudden. What's happening is we've still got more people coming off of government benefits than we have job creation. So personal income data is suggesting, they say there's a lot of jobs out there, but it's not offsetting the money coming out of less government spending. So we definitely got to keep an eye on that going forward. That's the second week in a row. This week's not quite as bad as last week. And keep in mind also, you don't have a lot of employment going into the holidays. So if anything, we're more likely to miss wider, actually miss next time than actually hit, because employers don't tend to hire right before the 4th of July holiday. Some of them will go on vacation this week. Some will go on vacation next week, taking a elongated vacation for the holiday. So that is one thing. They you don't typically do a lot of that hiring uh, during right around that holiday period, and that could be impact the personal income numbers going forward. Okay, and then finally, I do want to talk about the Baker rig count, and we actually came down a little bit on the rig count for whatever reason. They had some rigs come offline, just slightly. But my point is, until we start seeing a big expansion in the rig account, it's supportive of higher crude prices. And we did see out of my $73 area target, crude starting to break out there Friday. So I do want to point that out as well. Let me find my stop button. Okay, one of the main things about crude, would you know it? Would have to do that now. We are breaking above my $73. This is a yearly resistance level. Okay, and the fibs represent the distance between these last two fib levels, uh, critical yearly resistance levels. And we're in breakout mode here, above the $73. Next target 75.50 this week. And considering the rig count actually came down a little bit, so that is in the cards here, likely 75.50. And then once after we get that, then we're going to be coming up near $80. And they had been talking $80 6 months ago, so for crude. And so definitely keep that on watch. We are going into a holiday week, so that's also another thing supporting higher gasoline and crude prices possibly going into this week. But we are in a potential breakout scenario again. We had a little bit of digestion for a few days, and it looks like we are trying to push higher on our crude oil. Okay. So since we are in breakout territory, all-time highs on the SPY, uh, this area up here between the 430, 432 area, that would be a logical resistance area. This is a yearly resistance right here for this year, and this is a last year yearly resistance area. So I'm thinking they're trying to target right in this area, possibly 434, 435 area also. So definitely keep these on watch going forward here. If we were to get through that, then we go considerably higher. I think I got that on here. Maybe I didn't draw it. I didn't draw it. I'm sorry. But that'd be my next targets on that. Obviously, all upside here. We are in a monthly breakout on the monthly charts, and definitely stuff to keep on watch here going forward. We'll see what happens. Very easy to come up into these resistance zones, and here's our primary trading channel for the S&Ps. So we are above the primary trading channel. So I'm looking for some short opportunities up here on this chart. I also want to point out going into this week, trading week, it is really optimistic in this market, hugely optimistic on fairly light volume. So I do want to point that out. This is one of the highest readings ever on the SKEW, the put to call ratio going into this week. So could we have a big sell down in the market? Of course we can at any moment. But I do want to point that out. One of the highest SKEWs ever recorded in the markets. So definitely keep that in mind going forward here. Let me see if I can make a 20 year time frame here, 20 years. See guys, over the last 20 years, nothing even remotely close to what just happened Friday. So this updates daily. We're just absolutely it looks like a capitulation of the shorts. So, you really got to start thinking, you want to start adding short positions instead of pushing longs. Whenever you see the SKEW get this so far out of whack going into the uh, uh, next week's trading week. So I will actually be looking for some short opportunities. But taking it really, I'm pretty much sticking with day trading right now. But yeah, do not ignore what just happened here on your SKEW, please. So it seems it acted like Friday some weakness in our tech. And what I would want to point out here is my yearly resistance. Here's my yearly support. I drew a Fibonacci channel retracement between those two. And we're right at here at the 61.8 area on the Qs with a gap right below us. We couldn't gap up away from that Friday. So we got a gap right below us. And like I mentioned to the guys in the trading room, if we were to gap down tomorrow, that will create an island top reversal pattern, very bearish pattern, potential pattern going into tomorrow if that were to happen, if we were to get a gap down on the Qs. So definitely something we got to keep in mind here, especially seeing just how ridiculous the SKEW is getting right here. At any point in time, we can start seeing the global market starting to liquidate equities, no realizing that we've hit we are at very extreme measurements here. So definitely something to keep on watch. IWM. Another one, basically, like I said, we had data out suggesting the inflation theme is faltering. And this area of the market, which is a lot of small businesses, energy sector, biotech, and financials, your regional banks and stuff, have a heavy weighting in this sector here. And if the inflationary theme does continue to wane off this week, which the data suggests that's the case, we are at a resistance area here on our Russell, suggesting we could very easily be breaking away from this resistance level come first of next week. So I definitely want to keep that one on watch. I draw my Fibonacci channels off of Fibonacci retracement zones. That's how I draw those things. That's why they look a little bit different than what you typically see from. I could have drew it down here, and it would have pretty much given the same results. Okay, and but I drew it up here. So, but yeah, down here would have been a valid draw point as well for that Fibonacci retracement. We had prior support right here. That's why I drew it that way. Okay, so you could have done it either way, but definitely once we start crossing out of that line right there, that turns more bearish for the IWM. So we want to definitely keep that one on watch going forward here in our trading. Okay, quick overview here. We have Apple. Okay, we have basically this is our primary trend. that we've been trying to build out here for Apple. And so far, we are in the fast acceleration zone of the trend. We have not crossed over it. It looks like if we open down here tomorrow, we will be doing a change of trend for Apple, and it is showing some early relative weakness. So these Fibonacci's are based off of month high, month low, and we cannot seem to break out of last month's high area. We tried it for a few days there last week, just could not get a breakout on Apple. So keep that one on watch. Amazon, I did a similar thing on that one. Last month's trading zone. Okay, we came up here, tried to push out above last month's trading zone, rejected hard, especially there Friday on the Amazon. So definitely something to keep on watch here. Not looking too healthy on that stock. Personally, wouldn't even think about considering going long until 33.80 area. Okay, so that's the way I read the charts. And ideally, honestly, on the charts and stuff here, we got several wicks right here, so that would be my first chance. 33 area, 80 area here. If we lose that, honestly, I think all the way down here to the 32.67 area is in the cards. So just keep that in mind on that idea. Google, I've been calling out a breakout on this, but as we saw with Facebook, I mean, it started trying to push out and break out. Same way with Google here, and immediately they seem to get rejected. And these should be breakout patterns that just are not finding participants to show up to confirm them. So I think this is getting very long in this high zone here, and we have a potential for a very quick roll down here on our Google. So keep that one on watch as well. Facebook, like I said, we broke out of this prior consolidation zone. Okay, we came up here, and we're already finding some resistance. So definitely keep this on watch. We're in this really wide trading area on our fib zones. No telling what's going to happen here, but this could just as easily come down and break support as go higher, in my opinion. So I definitely want to keep this on watch. We did hold this prior, see that right there? We did manage to hold that. So if we lose this, 339.80, if we start breaking that on Facebook, prices are probably going to go considerably lower here on that one. So I definitely keep that one on watch. See, is there any others? Netflix, just trying to break out. This here is the 2021 Open, and we came up and rejected it there Friday. Had an upgrade on Netflix there Friday, and it managed to rally up to there. Roku has been on fire. I don't even want to, I won't put that one up. 1 second here. See, oh, Tesla. Looks like it's a failed breakout to me. Came right up to him, looking like a failed breakout pattern to me on Tesla. So definitely something to keep on watch here going forward in your trading. So really starting to look weak here on Tesla, in my opinion. And then let me think here. Boeing is one I really like to watch. And we do have Philly Fed industrial data hitting the tape tomorrow. So I'm thinking you're going to see, of anything you're going to see, is a outperforming in the industrials tomorrow, going into Philly Fed numbers. So it's tomorrow afternoon. So definitely something to keep on watch here. We do have a news out that United Airlines is talking about ordering 200 planes from Boeing. So there is a news release tonight, this afternoon. Boeing getting an order for 200 planes. I initially thought this thing was breaking back down lower in my initial analysis, and then we had that news, and I didn't realize Philly Fed was reporting tomorrow either. So there's few things there. Boeing has showed relative strength. Let me show you the chart on the relative strength. 1 second. So the final takeaway that I want to talk about Boeing here is a reading above 1 on a relative strength indicator. That shows that Boeing is showing relative strength versus XLI. So I do want to point that out. going forward. So, okay. So the last one I showed you was relative strength to the industrial index (XLI). This one here I got it relative to the SPY S&Ps. Okay, and so basically you're not actually um, getting that. You're getting slight relative strength um, to the. You're actually getting less than one. So when you get a read less than one, it's a little bit relative underperformance on the Boeing versus the SPY. So SPY's been on a tear, but Boeing really has not. So keep that in mind going forward here on your trading. But relative to the industrials, Boeing is holding out the best. So that's my main takeaway. Okay, if you liked the video, like it. Please retweet it on Twitter, and guys, leave comments below if you see stuff that I'm not talking about here. Okay, thanks a lot.